You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast, coming to you from Montecito, California. And before we start the show today, I do want to remind you that there is a page on the World Wide Web called wealthformula.com where you can go to get all of the additional resources offered there and also to sign up for some of our potentially interesting products, such as the Wealth Formula Network. A Wealth Formula Network actually is just a course, started out as a course. A lot of interesting people on there like Tom Wheelwright, Kenny McElroy, etc. But that actually ends up feeding into our community, which is Wealth Formula Network. We have bi-weekly Zoom video conferences where we see each other and talk about all sorts of stuff. We also have a Facebook page, and that's where we also can help each other with various things that we're trying to figure out in our own personal financial lives. Anyway, check that out and potentially sign up for any other lists or resources that are available there over at wealthformula.com. Now, let's talk about today's show. This is about risk, right? What makes for highly successful entrepreneurs or investors, for that matter? It's really an appetite for calculated risk. If you're a football fan like me, you know Bruce Arians, coach of the Tampa Bay Buccaneers, and I love this guy, and I remember him saying, "No risk it, no biscuit." And man, is he right? In entrepreneurship, that might be more obvious. You probably know that entrepreneurs, you hear the stories all the time. You probably know people yourself who left their day jobs and people thought they were reckless, but they were pursuing businesses and dreams that they knew were going to be successful. Now, whether or not they were successful is another case. But I can say, but knowing something like that is part of the DNA of an entrepreneur, right? And I'm one of those guys. In my case, I got fired from my first job, so that helped accelerate the development of my first business. But the next one for me, in a sense, was even riskier. I mean, the first one, I didn't really have much money anyway. So what was the risk to me? I didn't really have anything. But by the time I started the next business, I had quite a bit to lose at that point. So, I wasn't doing anything with investors or anything like that. It was all my own capital. It was very little bank leverage and that kind of thing. But I remember playing out the business model in my head and feeling like this is going to work, right? This is going to work. In my mind, there was no risk, only upside. And I know that sounds reckless, but that's the way young entrepreneurs, frankly, must think in order to create successful businesses. In my case, I was right, fortunately, and that next business did extremely well and took me to another level. Now, of course, entrepreneurship is different from investing, but then again, there are some similarities. Again, it's not hard to hit singles and doubles in investing, but in order to hit home runs, you have to be willing to take some calculated risk. In some cases, those are bigger risks. Often there's asymmetric risk where the upside is huge, but there's a possibility of losing it all as well. Some of you have already experienced that, for better or worse, in the world of cryptocurrency. The bottom line is no risk it, no biscuit. Ordinary investing will yield ordinary results. And if you strive for more, you have to train yourself and your coronary arteries, those arteries that are on your heart that you can get a heart attack if you clog them up. You got to train those arteries to be okay with risk. And no one knows that more than my guest on this week's Wealth Formula Podcast. This is a guy who's served as president and CEO of multiple major brands. He's an entrepreneur. He is recognized for his unconventional approach for high performance through strategic thinking. And we're going to hear from him and how to jump first and think fast after these messages. Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is Frank O'Connell. Frank is known for his unconventional approach for high performance through his strategic thinking. His accomplishments are significant, including serving as president of Reebok Brands, president of HBO Video, CEO of Indian Motorcycles, and chairman and CEO of Gibson Greetings Incorporated. And he's the author of Jump First, Think Fast, An Unconventional Approach to High Performance. Frank, welcome to the podcast.
Well, thank you. I appreciate being here.
Yeah, well, it's great to have you, and what we're really trying to discover a little bit about is how you look at risk in general, and maybe what you can do is, if you wouldn't mind giving us a little bit of background. I talked a little bit about what you've already done, but what are the components in your past that sort of have molded this view of risk that you'll present to us?
Okay. Well, it started early. I grew up in a farm in upstate New York. My father died when I was 2.5, and my mother stayed and ran the farm. And so as soon as my brother, who was a year older, and I were about able to walk, we started running parts of the farm. So during high school, we had quite an operation of machinery and growing crops and 3,000 chickens and whatever. So I learned really early on about taking risks. And, at that time, of course, my biggest risk always was nature. And I learned to live with nature.
Sure.
So, yeah. That early entrepreneurial impact taught me a lot about risk-taking, self-confidence, failure, but that got me on the path. So
yeah, absolutely. And then, so you grew up on a farm, then you end up being president of these major companies and CEO. To tell us a little bit about that journey and, maybe some of the lessons you learned along the way.
Yeah. Well, as you can see, I worked really for a number of companies, and I was very fortunate early on. I went to Cornell undergraduate and graduate school, and then started with a great company out in the West Coast called Carnation. It has super training programs. Started to learn about new product development, how to take risks in developing products and mitigating risk, etc. And then on to running businesses at Hunt Wesson Foods, and then made some big jump shifts. I spent about 8 years in the baking business, developed a product called Granola, which is, the first high fiber product that developed a $500 million business. And then making a big jump shift, went to work for Mattel in the early days of the whole video game business. And then took a big risk, cashed in my bonus check. I developed a business plan, and I went out to raise money to start my own video company. And I raised $4.5 million from Marvin Davis at 20th Century Film Corporation. So like in a weekend, but, a critical element there. But what I learned is particularly the importance of having a strategic plan. You can be a great entrepreneur with a great idea, but you really got to put together a strategic plan that shows what is your path forward, what's your competition, what really is the product, what capital do you need, what human resources, et cetera. So that is, and incidentally, I learned from that point on that one of the major failures of entrepreneurs is the lack of a plan, a really strategic plan. So, but, that was a big risk. We moved to the Silicon Valley, et cetera. And then, I went on to HBO video. And one of the biggest risks that I think I've taken is there was a company in the trading card business called Skybox. It had lost $80 million. Uh-huh. And so, there are seldom do they call you when everything is going well,
Sure.
Yeah. So, and they took a huge risk. Could I turn that company around? First thing I did was unbelievably risky, which is we destroyed millions of units of trading cards because they had overproduced those. Trading cards run on scarcity. We had a license from the NBA, the NFL, and whatever. And everybody thought, what are you doing? And we publicized it. We had accounting firms come. We brought in all the retailers. We shredded the product and served it to them on silver platters. But boom, that made every product now of ours in the market far more valuable. Then we took a huge risk. I had an NBA license. I was actually in David Stern's office, the commissioner of the NBA, when he told me, Frank, go to your television. Magic is going to announce he's HIV positive, Magic Johnson.
Uh-huh.
So I was the first one to contact him after that and to sign him on to an agreement. I could have never afforded him in a normal, kind of environment. Everybody else would have outbid me, but everybody else was afraid and scared. I did some quick research, found out the consumer and parents saw him as a hero. So we signed him on, and he did a commercial with his son. It just exploded our company through the roof. We ended up getting the license for the Dream Team, et cetera. So, that's kind of,
yeah.
Go ahead. That's an example of risk.
I think the moral of the story, for what you're talking about is, even from the title of your book, Jump First, meaning that sounds like not a very well planned approach, but really what you're talking about is having a strategic plan that may have an asymmetric risk, associated with it.
Yeah,
is that fair?
That's fair. I mean, there definitely the plan helps you mitigate the risk, but still the risks are high. In a lot of the coaching, I do a lot of coaching with entrepreneurs and young people in startups, because I've done my own startups from ground zero, et cetera, and I've invested in a lot of them. But often it is trying to, even if they've got a plan, it's to get them to really make that move, and then say, there's a lot of it you're just going to have to error correct and sort out as you go. And there are going to be things you're going to want to stop doing and other new things you're going to want to do. But, the key is you can't grow personally, you can't grow professionally, and you can't grow a company without taking risks.
Right.
So
now, it's one thing that I think is probably the case. I'm sure you would agree, is that a lot of these principles that you're talking about, you really could extrapolate them to your personal life, your personal finances, et cetera. I mean, if you're looking right now, we live in really uncertain economic times. And so, you've got businesses that are making decisions, that have to make decisions, but so do people who are managing their own estate and their own wealth and trying to survive. So, so how do you, what's some advice you have for dealing with these economic conditions and uncertainty and what to do? And maybe you can address, both business and personal.
Yeah. Okay. What I've done, this is on the personal side. Fortunately, from day one, I got a financial advisor who has been with me and my entire family through my entire career.
Yeah.
So I have always gone out and tried to search out some personal, some kind of really professional advice to help me try to sort out and manage my portfolio, and particularly the risk in my portfolio. And of course, they always kid me. I've always been on the higher end of the risk, because that's where I've got my, gotten my higher, my higher returns. But so it is very helpful to have somebody who's got a very broad picture to help you. And I work between, I've obviously done the best personally over time in the stock market, and with the help of a financial advisor. Then my own personal investments, of course, is I invest in things I know, which are consumer products and consumer product startups, where I've got an absolute feel for the product and the risk and the market and the consumer and the probability. I'll tell you the toughest thing, which everybody can understand. You've got to be in this environment. You've got to keep making projections on trends. And that's the most difficult, part. I've got a massive food company. And the key there is what really is going to happen to all this, the commodity pricing and the consumer behavior moving at the same time. I try to get the best information there I possibly can.
Yeah, I mean, I think you talk a little bit about, data-driven strategies, right? And like, if you look at like the economy right now, it's so volatile and unpredictable. I mean, how do you even interpret that data?
Yeah. I just say agility,
Yeah.
you got to be willing to stop things that aren't working and move in the direction of things that are, that are on trend. And I'm not saying there's still things that require having a good time hold. I'm going to say one thing, and you know a lot about this. We personally, and my wife, in addition to all my investments in companies, I've made most of my money in equity, investing myself in the companies I've run in it.
Right.
Turnarounds. But the other one that has been phenomenal for us has been real estate.
Right.
So we have made substantial investments in real estate, and I suppose taken some pretty big risks there. But that has been throughout time just a phenomenal return. And again, that's on the smaller side. We're buying houses at $3 million and selling them for $5 million, or spinning, etc. But that has worked out real estate has worked out extremely well.
Yeah, absolutely. And but again, I guess in terms of like not just what you're investing in, but like how do these times, like let's just say right now you're say you're thinking about doing one of these real estate projects. How are you looking at the market right now? You have rising interest rates. We might be on the precipice of a recession. I mean, I'm not asking you specifically for advice on what to do, but more rather sort of the analytical, platform that you're using when you start looking at these things.
Yeah. Let me say this is, it's hard. I'm big on data informed. I know they told me, don't use data driven because that implies you're just using a formula,
Yeah, right.
I try to get the best data and forecasting that I can get. Now particularly in the real estate market now, in the personal market, which is now starting, of course, is weakening. We stay in the high end segment of that market, and that has been absolutely the best. And going forward, I still think, where the interest rates aren't such a big factor as an example, but that's part of all of the data analysis. Now, when I'm doing consumer product stuff, and I don't want to bore you with it, there's much more sophisticated research that we use there, segmentation studies on forecasts. And what we're doing is talking to consumers today about what's going on in the future, millennials and Zs, and their change in their behavior. Mm-hmm. That's where we try to get, a lead on being informed.
Sure. Sure. You obviously have this background in a number of businesses. You get a pretty good idea of, how to look at calculated risk. Tell me what you think, if you're to a certain degree, you have to try to predict the future, right? Like, I mean, you can't really make decisions if you're not, projecting something. So look at the economy right now. And what are your projections? If you're, and right now, I don't know if you're running a company necessarily on a day-to-day basis, but like, what are you seeing, and what do you think the economy is going to do?
Well, I think, there's kind of, I think on one hand, first I have to say, I suffer from being extremely optimistic and positive.
Yeah, well, that's a good thing. Yeah.
It's a sickness, so you can't get through all of this stuff.
Sure.
But I definitely see. And let me speak. We've got. I've been the chairman and on the board for 16 years of a huge $5 billion food company. We're in every imaginable category, and we've got access to every consultant imaginable piece of research, et cetera. Yeah. And we're still figuring out. Yes, I do think we are definitely going to go we are going in with the high interest rates, and whether we are going into a recession, there's no question. And if you're on the food side of the business, yes, because of the grain issues, we're definitely going to see for some time, we're going to see increasing costs of, in the whole, supply chain issue. But I will say, from someone who's deeply involved in a bunch of businesses, and I've got a toy business is going through the roof.
Yeah.
And we can talk about that. That's very interesting. We'll talk about that one. My view is actually the business is very, very healthy. And, I think a lot of it is, of course, the consumer a bit worrying drives the recession. They start to cut it back because they're worrying about what's going to happen in the future. So they kind of start creating the reception, which I don't see. I mean, our businesses are very profitable, and our businesses, generally are growing. Yes, we do have some blips in the curve, but nothing strategically that I see in a wide range of businesses that I'm involved in that says, boy, on the long term, this thing that we're going to continue to, decline. So I'm yes, we're going to go through a tough year. There's no question about it, for a lot of reasons, politically and whatever. But I do not see any kind of prolonged recession. So
were you were you active in various businesses during the 80s, during the hyperinflation era?
Yeah, certainly I was in business during that time. Yes.
I'm curious if you would, just give us a little bit of a comparison of those times versus what we're seeing right now. Well, from a business perspective.
I'm probably not the best person to be able to do this. I'll just say, when in the 80s, that was the time when actually I was running Reebok, and we developed the pump. And, I brought out a shoe I was selling for $180 and did $1 billion worth of sales in the first 12 months. So I said, okay, now what's going on? Where do these people come up with this money?
Wrong with the economy. It looks great.
People are not eating to buy, eating to buy sneakers. So, I think we're going to come out of this pretty quickly and pretty healthy. So, I don't see this being prolonged, and I can't do a great comparison to that time period.
Sure. Let's talk a little bit more about your book, Jump First, Think Fast, an unconventional approach to high performance. Give us some of the main, obviously we've talked about some of those themes, but what are some of the themes that we've not covered?
Okay. And let me just kind of mention that, why did I even write this book? I've been fortunate. I've had a great, fun career. I've moved 20 times back and across the country. I've run, 10 companies from a CEO standpoint, etc. And when I decided to write the book throughout my career, my give back has always been mentoring, and it is very much today. My door was always open to my office. My first concern was about you and your personal, your personal development. So I really got started on using my examples of being in the trenches as a teaching tool. Instead of writing a book that said, here are the 6 things you need to do, which are most business books, I wrote it from all of the entertaining stories of my career. And then you read those stories, and basically you pull from them what's relevant to you. So, here, some of the central themes in here is, we talked a lot about planning, but I'm going to start back one more, and that is know yourself. When anytime anybody comes to me, and particularly a young person comes to me, I say to them, and a young entrepreneur, I start with, who are you? What's unique and different about you? And a lot of people that initially come to me are kind of following the flock. They're following their peers and the values of their peers. And of course, what I'm very much into is looking at a unique path for you to follow, where you're just not following everybody else's values. And I have various techniques of where I make them said, okay, you got to come back to me. And in 5 lines, tell me, what's different about you. And then what I do is try to work with them from that point forward. If they want to do, if they're, entrepreneurial, and I get a lot of people coming out of corporate life that are going into entrepreneurial, then start saying, what are your passions and what, from your analysis, what are your skills? And then what are the business opportunities or entrepreneurial opportunities that that you should be considering. So I try to start very much from understanding the individual. And then, of course, it's into a much more disciplined, approach of evaluating options and opportunities and how to go about that and the capital required. And then, one of my key things, and I'm sure you know this so well, is talent. Even if you've got a startup, ground zero, and there's only going to be 2 of you or 3 of you, it is choosing the right talent is so critical, and people that can work together. It tears apart more entrepreneurships, even if they start to become very successful. So I say, just really spend time on defining the talent. And then from then on, it's, the normal stuff: accountability, agility, creating the right culture. I'm very big on the right culture, particularly in startup companies, et cetera. So,
are you involved a lot in startups right now?
Funding startups, and where I get into a lot of them is working with private equity companies where we're investing in startups. And then I go in, and I frequently go in as kind of the chairman of the board, as basically the coach. Yeah.
Right. That makes sense. So what's, you're busy, obviously writing books, being a chairman. What else on the horizon for you?
Well, I have a toy company we've had for 6 years.
Yeah. What is it called?
It's called Schilling, SCHYLLING. And, I had worked for Mattel, so I had a background in toys, et cetera. We bought this company 6 years ago. Interesting. I'm normally on the leading edge of everything, new technology, et cetera. In this case, no batteries, no electronics.
Yeah.
and it's all the standard, play patterns and, some of the very classic toys, millions of,
going
tin
retro.
Jack in the, retro tin Jack in the boxes, et cetera. Now, when the pandemic hit, those products went through the roof. And because all those kids are home, our volume is unbelievable. And that's key to us is understanding, what business are you in? That's one of the key things I ask entrepreneurs. And they always tell me the wrong business when I take a look at it. No, in trading cards, we were not in the trading card business. We were in the business of connecting kids and their heroes. So, that's extremely important. In the toy business, we're really in the educational business. So well-educated millennial moms, as an example, are critical, understanding them. And of course, what they want is to keep their kids away from electronics as long as they possibly can. So now the thing that's happened there is also, I'm very big on innovation. We were very fortunate. We created about a year and a half ago a product called Needo, Needo8. It's a compression ball. We've blown it into a brand. We're selling millions of units. It's in any toy store you go into, any mass market you go into now, you'll find, Needo. Now, you always hope that that's something that will happen to you, in the toy business. And then acquisition. So we reinvent. So we bought a year ago the lava lamp company, the old lava lamp company.
Yeah.
We're reinventing the lava lamp. And 2 weeks ago we bought the big wheel. The ride-on big wheel.
Yep.
The old big plastic
Yep.
thing you wrote us. So we bought that, and we will reinvent that. So I'm deeply involved with and a lot with now dealing with China. I can tell you a lot. I'm going to give you one other scenario on that, but dealing with China, all of the shipment problems, the plant problems, everything there. I spent hours on the phone dealing with that. And that's one of the other things about entrepreneurs or young people: travel. Do everything you can to understand the world, and in particular, go to India and go to China, where I've spent a lot of time. You can't understand the world. And of course, if you're ever involved, I'm in 100 plants in China.
Yeah.
You've got to understand what's going on from a very personal standpoint. But anyways, yes.
Sounds great. This is really interesting stuff. The book again is Jump First, Think Fast, An Unconventional Approach to High Performance. I assume we can get that everywhere, right? Amazon and the usual outlets.
Yeah, it releases on October 24th, but you can go up on the website, which is just jumpfirstthinkfast.com, and then there's a lot of stuff on LinkedIn. So,
Frank O'Connell, everyone. Frank, thanks so much for being a Wealth Formula podcast. Love to have you back again sometime.
I'd enjoy it. Thank you. I enjoyed watching all of your other podcasts.
Oh, great. Well, I appreciate that too.
Yeah, you actually had, I went to Cornell, the College of Agriculture. You actually had a guy that Mark Belmere.
Uh-huh. Yeah.
Who is, and I just listened to his whole podcast. He was right on. He was saying things so familiar to me,
that's hilarious. That's
all
great.
Those farm boy stuff,
Well,
okay.
Good. I'm glad I'm glad we got you to enjoy some of those episodes as well. Yeah. Thanks again. We'll be right back.
Thank you.
Welcome back to the show, everyone. Hope you enjoyed it. As a reminder, in addition to Wealth Formula Network, there is an accredited investor group. And if you have not signed up for it, Investor Club, you may want to do that at wealthformula.com. People have been asking about if there's going to be offerings in there. We will have some offerings there before the end of the year. So if you are an accredited investor, get onboarded sooner rather than later. That's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.